So welcome, everybody. It's good to see that we had such a really good turnout for this, and we were expecting it to because of the questions that we were receiving and the confusion surrounding it. So really glad that everybody could attend today for this enthralling subject that we all love. So my name is Kara. I've been at CTR for about 5 years. But I'm really excited to be the presenter for this webinar because I've been in your shoes not too long ago as an employer fielding questions. So I know what it's like to be on the other end. And then we have a couple other people on the call today. We have Sherry and Vince, and Sherry and Vince are really the W-4 gurus. They're here to make sure that I don't sway in the wrong direction. They have been fielding calls and fielding questions about this for I won't say quite how long, but a good while. So again, excited that you're here. I see some familiar faces, some new faces, and we're hoping that today will be really, really insightful for you and help you with your employees. So to kick it off, I'm going to hand it over to Bridget Escobar. She is the president of CTR, if you're unfamiliar.
Hi, everyone. Thank you for joining us today. Sherry came to me, I guess, a week or so ago and said, boy, we are getting a lot of questions about this W-4. And I said, still? Like, hasn't this been around for a while? And we had done a presentation, I guess it was, what, 2 years ago, Kara, on this. And, you know, to Sherry's credit, she said, look, if our clients are submitting this many issues, I really think that we need to pull something together quickly here. So I want to thank all of you for pulling this together so that we can give everybody some valuable information. And we also thought if our clients are having this many questions on it, why not share the wealth? So we actually invited non-clients to this webinar as well. And we were shocked at the amount of people that signed up. Honestly, this is our most attended webinar since COVID. So I wanted to just jump on because we have so many non-clients on this webinar and just give you a 2-second overview of who we are and what we do. And the way I like to describe CTR in the most simplest way is with some data. So there's 4,500 payroll companies across the United States. And the interesting statistics that I learned is that of those 4,500 payroll companies, 80% of them have 20 employees or less. And so those are your bookkeepers or CPAs that provide fantastic service, very hands-on, but typically don't have a lot of the HR technology, all the bells and whistles that the other side of the market, which is that small slice of providers, national providers like your ADPs, Paycors, Paycoms, Paylocities, you name them. The small group of national providers have. The challenge with the national providers is that when you go to get all the technology, often you lose the personal touch, customer service, and we fall in a very, very, very small sliver of payroll companies that have basically the best of both worlds. We can give you all the technology, so a full HCM solution, HR bells and whistles with all the services, but from a regional provider that has very dedicated support, hands-on training, on-site training, you know, all of the things that you typically can't get from a national provider. And that's it in the simplest form. So I will let you guys do it, and thank you for putting this together.
All right. Thanks, Bridget. Okay, so let's get started. I'm going to share my screen. Okay. Sherry, can you confirm if you can see my screen?
Yes.
Thank you.
Had to find the mute button, sorry.
Great. All right. All right. So, like Bridget said, welcome. So glad to have you. Just a couple things before we get started. So everybody is on mute, but the questions are open. So at the bottom of your screen, you should see a question and answer. If you have a question going as we go throughout the webinar, feel free to type it in there. We're going to try to answer them as we go. When they come in, we'll pause, we'll answer. If there is a question that we don't get to, sorry, but we'll follow up, and then we'll follow up with everybody with the list of questions and answers after the webinar. With the webinar, we are recording it, so you will get, anyone that registered will get a copy of the recording, and then you'll get a copy of the slide deck. And like I said, we'll send those question and answers out as well. So please, as we go through, don't be afraid to ask a question. Chances are, if you have that question, you've heard that other people do as well. So without further ado, so like Bridget was saying, Sherry went to Bridget and said, we're still getting these questions, and why are the questions happening right now? Well, why people are getting their tax refund check back and being like, what is going on, because of how they filled out the W-4. So let's take it back a little bit. So as Bridget mentioned, we did a webinar a couple years ago. So the W-4, if you remember, went through sort of an overhaul in 2019. So as of January 1st, 2020, we were on the new form. That form had some pretty significant changes compared to 2019 and older. And the whole reason behind it was to make it simpler. That's a personal opinion, whether you think it's simpler now or not. But there's still just a whole lot of confusion on it. So as we go through, we're going to kind of talk about not only how the W-4 is right now and how to understand it, but what the difference is between, and I'll refer to it as the old version, right? 2019 and before, and then 2020 and after as the new version. And what sort of makes that difficult, not only for employees, but that makes it difficult for you as the employer, right? Because you're dealing with, employees that, first off, half are on the 2019, half are on the older one, right? Maybe half are on the newer one, and no one seems to understand either one. So it can be pretty frustrating. So just a couple things, I guess, to touch base on that. If you remember, in 2020, that it was changed to be called now the employee withholding certificate. So actually, let me talk about those changes just a little bit more too. When we went through that webinar before, we talked about some of the changes. So I just kind of want to mention that before we get into the detailed deep dive. So no more withholding allowances because allowances were tied to personal exemptions. So that's the main piece that you'll see. So on older forms, you have that. On the 2020 or newer forms, you don't. You also have head of household. So that's, that was a new status for individuals who may have not been married, but were paying more than half of the care of the qualifying person. So that came out on that 2020 form. And then I'm just looking at my notes. New adjustment for households that have multiple workers to give a more accurate estimate of withholding. And then the other main change from the old form to the new form, and again, we'll get through this, is that, you know, you used to be able to, on that old form, withhold a flat percentage or flat dollar amount. Now, you know, you have to use those IRS tables and withholding methods. So while it may be simpler in terms of the calculation, there's still, people are still obviously messing it up, especially when they come to you and are like, okay, you know, why do I owe taxes? Last year I got a refund. Well, let's go back to how you completed your W-4. So where are we now? So new hires that received their first paycheck after 2019, they have to be on that 2020 or later version of the W-4 form. Now, and we'll talk about this, I'm getting ahead of myself a little bit. The 2024 form was adjusted for the allowance amounts, but anyone that is hired after that, so any new hires going forward, must be on that 2020 or later form. So as an employer, it probably makes it easier if everybody's on one form, right? You can ask your employees to complete a new form. They're not required to. So again, any new hires, yes, they're required to. Anybody that is updating withholdings or making changes, they're required to. So that, you know, that's a way to get employees onto the newer form. But again, feel free to ask if that's, you know, if you want to do that. They're just not required to do that. So the amount that's withheld each pay, it's determined by tables and formulas that's published each year by the IRS. The good news on that is with CTR, our software is updated automatically each year with this. And if you're with another payroll provider that has, you know, payroll software, that is done behind the scenes. So that is something that you don't have to calculate and worry about. So it goes by employee filing status, the credits or allowances claimed, and then additional withholding requested. And Vince, you've researched how many of these have you seen errors in the calculations?
I've been asked to review probably 40 or 50 individual questions that have come in. And every time that I've reviewed this, what I found is that if you take a look at how the employee is set up for tax withholding based upon the W-4 form and compare that with the actual dollars, taxable dollars that the person earned and the tax that was withheld, I have yet to find an error in the software calculation. So the main issue when people have questions or believe that their withholding is not correct, it's not that the software did anything incorrectly, but they have made a choice in the W-4 elections that perhaps resulted in too much withholding or quite frankly often too little withholding. People are
Right.
saying, wow, my tax preparer says that I owe a lot of money. Why? And it's because they may have claimed too much in terms of a dependent dollar amount, things like that.
Yes. Yep. So then that's what we're seeing all the time, is really just the confusion surrounding how to complete this. So on that note, seems simple, right? So all of this, again, like Ben said, this is all affected, you know, by the tax elections that are made by the employee. And, you know, on top of that, what form they used to complete that. So let's break them down. I know we talked about them a little bit, but I want to go a little bit further. So the main difference here with 2019 and 2020 went from 7 steps to 5, and really um, for people that aren't don't have children, or they're just filing single, it's really step 1 and 5 on the new form. So you can see the difference in filing statuses here. And again, you'll get this presentation. So single, married, married but withhold at the higher single rate. And then we went to single or married filing separately, married filing jointly, or qualifying surviving spouse, and then head of household, which was brand new to the 2020. So again, the IRS only requires that employees complete steps 1 and 5. And then for the new form, and steps 2 through 4, it's just who qualifies for them that has to fill that out. And then like previous forms, the newer form does have the multiple jobs worksheet, the deductions worksheet. But again, I know I probably said this twice now, but the new form went away with withholding allowances. That's why there's a little bit of confusion there. So long story short, if you have someone that's been with you 20 years and they have a life change and they have to complete a new form, they can no longer claim withholding allowances to lower their federal income tax that's withheld. And that has been, some of the struggle there, because, you just didn't have a bunch of new hires in 2020 or recently, right? You may have had a lot of tenured employees that didn't know anything about having a new form. So that's why the confusion is still there. Anything, Vince or Sherry, you want to add to that slide?
Nothing really to add, but to take this a step farther, the new form actually, rather than being simpler, is more complex. The intent was to allow an employee to refine withholding based upon his or her particular status at the time of employment. And so rather than just entering 1, 2, 3, 4 exemptions, now I can put in a dollar amount based upon number of qualifying children or other dependents, and I have the ability to further refine my withholding. That becomes, of course, tricky. Starting on January 1st and deciding what my status is going to be December 31st of that year.
Right.
But it does allow a refinement of the withholding.
Thank you, Vince. So this, you can see here's the old form. And again, you still probably have people on this form for step 2. And then the newer 2020 and after, you have step 2 and 3. So how does that work? I mean, like Vince said, now that employees who want to, I guess, lower their tax withholding, they must claim dependents in step 3, or use the deductions worksheet, and then they would enter that in step 4B. Employers can also request, and I think I'm getting ahead of myself. Yeah. So employees can also request to have additional amounts. They can check that box if they either work 2 jobs simultaneously, or both their spouse and their both they and their spouse work. And now there is a couple things with that. So, um, you know, there's a privacy thing, and that's why that deductions worksheet kind of exists, because if a person doesn't want their employer to necessarily know that they have a second job, they can fill out that deductions worksheet instead of just simply putting that on the form. So that is a kind of a privacy protection. See a question here. If an employee is married to have more withheld, can they just mark single to withhold the higher rate? Vince, you want to take that one?
Yes, absolutely. That's still an option. The previous form had three choices: single, married, or married and withhold a single rate. But quite frankly, the software only had two choices: single or married. So if you chose married, withhold a single rate, we just marked you as single to keep it simple, because the tables only had two options: single or married. Now the same thing happens. There are three options. Single, married filing separately, married filing jointly, or qualifying widower, and then head of household. The only restriction is for household, head of household. The form does specify that it should only be chosen if one is unmarried and can claim another person as a dependent. So yes, indeed, if you are married and want to have the higher rate, then the employee can choose the single option. There's no requirement that the selection on the W-4 form match your actual physical marital status.
Thanks, Vince. So, um, you know, the best thing to do, use CTR to handle your federal income tax calculations for you. Or at least, if you're with another payroll provider, knowing that you can count on payroll software and that happens automatically anytime there's a change, anytime those withholdings calculations change, the tables change, that's going to happen automatically for you. Which, for me, as an employer, that relieves me from that and helps with my sanity. So the other thing here is, and again, you'll get these slides, I put this in the tax withholding tables. I included the link for these calculations and conversions. It's very, very lengthy and it's IRS language, but in case you need it, it is in there. So just to note, the 2024 income tax withholding table does have new amounts. It was adjusted for inflation. So you'll want to make sure you'll adjust your payroll tax withholding to reflect those changes if you're not on automatic software. Looks like we have another question here. I am single and I always choose one. In the new form, what is the 0 and what is the 1? Is single the 0 and head of household 1?
If I may jump in, there is really no 0 or 1 with the new form. So if indeed I am single and I do not have another job or another source of income, then I would simply choose single or married filing separately. And then if I want to reduce my withholding because I do have another person whom I am supporting, then I would put in the dependent amount of $2,000, for instance, and that would result in a withholding that would take into account my single status and the fact that I have a dependent, meaning that when I file my return, I'm going to probably have some sort of a credit, a child dependent credit or child care credit, things like that.
Thanks, Vince. So, for those of you that are on that are clients of ours, what's nice is that we do have the tax wizard in self-service. So when your new employees come on, if you have onboarding, they're going to go through the tax wizard, and that tax wizard automatically generates the W-4. It helps them with the calculations. And again, it just makes life easier on them and makes life a whole lot easier on you, because you know that that is happening. And then also, instead of having paper forms or worrying about that for existing employees, when they need to make a change, they simply can just go into self-service or on the app, update their withholdings, and then you will get that as the administrator. So jumping into a couple different things here. So, we talked a lot about the W-4 sort of from an employee perspective, but let's talk about it from an employer perspective. So, couple questions that we received that we want to cover here. So employee responsibility. So an employee claims an exemption on their W-4. What does that mean to you? So as an employer, it's your job to withhold taxes from employee wages. So if an employee gives you a form saying that they're exempt, you wouldn't want to withhold those. And then that requires a certification. If the certification or exemption expires, you would start withholding those taxes again. And then if you're not withholding federal income tax from an employee that didn't claim an exemption, you may have made an error. So that's something to check. Now, you may not have made an error. The employee may not have met the threshold for withholding, but it is always good to check that if you see that there's no withholding on an employee. Could be a keying error, could be that they didn't meet the threshold. Let's see here. I know a couple questions. I know employees that were on the old form can continue that way, but is it better to have them convert to the new form? Would their federal tax withheld be more accurate? So it's all a matter of opinion. Really, if you research this, people will tell you different things. I believe it is. I mean, the new form was made to make withholding more accurate. You can't force them to do that. You can't, legally, you can't require them to do that unless they're, wanting to make a change or it's a new hire employee. But you can always ask them to do that. And the clients that I worked with that have done that have just pushed that out and said, did you know, and did some education on there's this new form, here's what it is. Here's self-service, feel free to go in and go through this to use the new form. Most employees do it. So I think that personally, if I was, in that situation, I would educate my employees. I would tell them this is available and give them at least the option to be able to do that. Does the employer have the right to ask the employee to prove their exempt status? Vince, you want to take that one?
The IRS relieved the employee, the IRS relieved the employer of the requirement to justify what an employee put on the form. And so if an employee claims exemption, you do not have to require that the person prove that. What's going to happen is that their taxable wages are going to continue to accumulate. They will get a W-2 at the end of the year. There just will be no withholding. And so if there's a consequence to that, that's something that's on the employee. But the W-4 with the claim of exemption is your record that it was the employee's request and not your decision to mark the person as exempt from withholding. So no, there is no requirement. Just as before, at one time, if an employee requested a large number of dependents, say filled out the W-4 form and said, I'm married and have 99 dependents. At one time, you did have to have the employee prove that, but the IRS took that away. And if the employee said married with 99, you just put that in, allow the withholding to happen as it was. And then if the IRS decided to challenge that, then they would go to the employee directly and then to you as the employer later on. But you don't have to investigate or have any justification for what the employee puts on the W-4 form.
Which is good, right? Because, at the end of the day, they are the ones marking that they're exempt, right? The employer is not taking it upon themselves to do that. So, let's see.
If I may, Kara, just back to
Sure.
that previous question about should an employee change to the new form? The bottom line is, are they happy with the withholding from the previous year? Did they have enough? Did they have too much? Or was there a large life change? The children have now flown the nest, or a second job came in, or something like that. If there's a major life change, then yes, it would make sense to do the new form. But if the person is relatively happy with what they had to pay or what their refund was, then there's really no outstanding reason to make that change.
There's a couple more questions. Let me go to this slide real quick and then we'll go to the other questions. So I think we may have mentioned a little bit about this, but in part with that exemption, it doesn't mean that the employee is exempt from Social Security and Medicare taxes. And I think that might have been one of the questions. So I wanted to jump ahead a little bit. It also doesn't mean that the employee shouldn't have taxable wages on their W-2 form. The employee is exempt from taxes, but not taxable wages. I think that was one of the questions. The other thing is state and local tax. Exempt on a W-4, it doesn't automatically apply to state and local income tax. And as you know, for those of you in Pennsylvania, our fund, state and local tax, that all can vary. So, it's the employee may need to fill out separate paperwork or do something different for the state or local. Let's see here. Vince, do you know where we are on the questions?
Well, the next question that I'm seeing is in regard. You had mentioned that the employee's income may have not met the threshold, and the question is, do you know the threshold amount? The best way to answer that is there was a link that that Kara had mentioned to the IRS publication 15T. 15T is kind of lengthy, but the nice thing about it is that it has withholding tables. And so there's a section for people who have 2019 or older forms, those who have 2020 or later forms. And then it's also broken down by whether the person's paid weekly, biweekly, semi-monthly, monthly. And so you can look in there and look at the person's status. And there's an actual chart that would have been used years ago by payroll people manually. But the chart does show that if I am, for instance, a married person under the new form biweekly, uh, this is the threshold is there for each income range. So if my taxable wages are $500, I may not be required to have any withholding whatsoever. So the publication 15T is the best place to find that, because the threshold does vary based upon how frequently the person is paid, their marital status, and whether it's the old form or the new form. It's not just a flat amount.
Vince, you want to keep going with those questions? We got a couple in here that I want to tackle before we move on.
Kara, going farther, following up on this whole idea of exemption, the question came in: when an employee elects to be exempt, the IRS requires a new W-4 form to be filled out each year. That is true. And the question is there a mechanism to alert the company? At this time, there is not, but a request has been put in for enhancement that would provide some tool to the employer to say these people have claimed exemption for 2023. They need new forms for 2024. So that is in the works, but it is not currently available.
So the next one, I have no dependents and wanted more in my paycheck, like when I did claim one. Would I just solely choose head of household and that is it? Does choosing single take out more taxes? Again, no dependents, just myself.
The single or married filing separately status is the highest withholding. And so if one were to move to head of household, that's lesser withholding, and then married filing jointly is the smallest amount of withholding. That doesn't mean it goes away, but it's a smaller amount. And again, the publication 15T is very helpful in that regard because it would show exactly what would happen. If I know that on average my paycheck is X dollars, I can look in the chart and see what the withholding would be. So to go from the former single in one to what would be best in the new one, probably to reduce withholding, one could go to the married status. Head of household is kind of questionable because it does specifically say I must be unmarried and support at least one other person. So to go to married might be an option, but again, that there are other factors that go into that, any other income, any credits that a person might qualify for, and so forth.
Let's see here. The new form does not have an area to claim exempt as the old one, or am I missing it? Let me go back. I don't know if I have it in these screenshots or not.
Go to your next screen. On the new form, step 4C is extra withholding. If the person claims exemption, the person would simply write the word exempt below 4C. There is no checkbox for the exemption. The person would handwrite that in. And again, that becomes your verification, your documentation that the employee requested it. If this is done through the tax wizard, there is a check mark that is then recorded for the employee.
Yeah, so just to verify, for CTR clients that are using that tax wizard, when they're exempt, they do actually check that they're exempt in the actual tax wizard. And then that populates the word exempt, but filling that out paper wise underneath 4C. Sorry, we were just confused by the first answer to my question. No need to be sorry. I may have confused you. What if an employee is on Social Security? Is I don't know what that's referring to.
Well, if a person is receiving Social Security income, that is an additional amount of income. The thing with Social Security is that the amount that's being received in Social Security may or may not be taxable, depending upon what the person's income other than Social Security is. I have some personal experience with this. And so this is not a standard thing that would be easily answered within the tax wizard or even the W-4 form. It would really depend upon the total income that the person has, uh, which would which would determine the amount of the Social Security income the person receives being taxable. The tax ranges from 50 to 85%. So if one goes over a certain threshold, and that's based upon your filing status, or I'm sorry, your various statuses, and so that's something that we really have to be answered on an individual basis with some specific information.
All right. A couple more questions. So let's go to another slide and we'll come back to the questions. Um, so another thing that we are, asked frequently is how long must an employer keep employee W-4 forms? The answer to that is at least 4 years. At least 4 years to make sure that you have those on file. So, when must the W-4 be completed? So, anytime that you hire a new employee, before you give them their first paycheck. So you're going to start using that new 4 by the start of the first payroll period. And then there is an example in here as well. So you can look at that when we send the slide deck over. How does an employee update their W-4? So employees can change the withholding amounts on a W-4 at any time during the year. But changes made later in the year, obviously, those will have less impact on taxes for that year. So in our employee guide, which I'm going to show you at the end, it has a lot of different circumstances for why an employee would want to change their W-4. So in this example, I just use marriage, divorce, maybe there's a change in income. And again, self-service tax wizard makes this easier. Tax advice. So this one's really big and it's personally, I find it very hard. Don't do it. So while it may be tempting to help during a transitional period where you're, should they fill out a new form? Is it going to be better for them? You're not allowed to provide tax advice. So the best thing that you can do is provide resources for them to look at and for them to study so that they can understand it. It's again, being in your shoes not too long ago, you just have people like they have no idea. especially like if you're dealing with people just graduating from high school. Maybe it's their second job and they're like, I don't know how to do this. I don't know what to do. It's really hard to kind of hold back and not give advice there, but just having the resources and providing them the resources is the best thing that you can do. And we're gonna help you. We're gonna help you with that because we know how challenging it is. So couple resources. So there is the tax withholding estimator, and this is now on the 2024 form. So the link is there, and like I said, you'll get this and have this link. If you've never used it before, check it out, especially if you're gonna hand it out to your employees. I recommend checking it out before you do that so you know and you can go through it. And then the other thing is we completed a step-by-step guide for you to give to your employees that we're gonna go through. So let's see. It's 11:46, so let's take some other questions and then we'll get to that employee guide. So where are we, Vince, with the questions?
There was previously a question about that was asked. I am single and always chose one. The new form, in the new form, what is 0 and what is 1? Is a single 0 and the head of household 1? And I guess I didn't answer that very well. Kara, if you could go back to the slide that has steps 2 and 3 and 4.
Sure.
This one here, so that on in step 1 you would claim a status of single or married or head of household, and then there is no place to just simply say I want 1 exemption or 2 exemptions or 0 exemptions. It's step 3 that says claim dependents. And so if your dependent is a child under the age of 17, you would put 2,000 in there. If the dependent is someone other than a child under the age of 17, a child over 17, or perhaps a parent living in the home, or another individual for whom you're providing more than half of support, you would put $500 in there, because the credits that are available in that situation are different than if you have children under the age of 17. And so ideally, a 1 would equal $2,000 on that first line that says multiply the number of qualifying children by under age 17 by 2,000. That would be the most straightforward answer to that. There is another question coming up that says that if my child is turning 17, should the form be adjusted? Yes, the form should be adjusted, because you're going to lose that dependent credit when you file your tax return within the year. So indeed, if a previous amount of, say, 2,000 was put in there, then the new form should be entered, should be put in that does not include that $2,000. The other thing on here is with step 2, again, to clarify that if the employee is the only person working, then nothing needs to be done in step 2. But if the person has a second job or has a spouse who is working, then a check mark in 2C does increase withholding to take into consideration the fact that my job plus the other job don't automatically add together for withholding. And so the second job could wind up with my going over into a newer income tax withholding bracket. So a check mark there tries to adjust for the fact that I have a second job, which this job doesn't take into consideration, and would improve my withholding. And that should be done for both jobs or both spouses if it's a matter of 2 spouses. So putting a check mark in there will increase withholding. Adding a number in step 3 will reduce withholding. Then Kara, if you go to the next slide, we didn't really talk about that very much.
Mhm.
With step 4, here is where I can put in other income. So for instance, the question on Social Security, I could put in there an amount of my Social Security income, or at least part of it, if I believe that it's going to be taxable. And then my withholding is going to be adjusted based upon that. So something that goes into A is again going to increase my withholding, because it's going to say, oh, wait, the person has more income than just what is being paid on a biweekly basis, for instance. If I expect to be able to claim deductions other than standard deduction, and this is an individual situation, maybe because of charitable contributions, a property loss, or something like that, then I could put a number in there, and anything in B is going to reduce my withholding. And the simplest way to get more withholding is to simply put a flat amount in C, extra withholding. Again, that will increase. So A increases, B reduces, and C increases. I think we outlined that on the employee guide that's going out.
Yep. So we'll get to these questions. Don't worry. Let's just take a look at the guide, because I do think you'll find that we did, yeah, like Vin said, we did outline a couple of things on there. So this is the guide that you'll all receive. And we'll send you the recording, we'll send you the slide deck, and then we'll also send you this employee guide. So you can see here, this is a PDF file. And what this guide does is it takes them through, it tells them basically what the form is, and then it takes them through step by step. So it's telling them exactly what to do for each step. So you'll see, step 2, this is going to increase your tax withholding. This is what it is. If you have more than one job, this step only applies to those individuals who have more than one job at the same time, or those for whom all 3 of these things are true: married, filing jointly, or both spouses work. So it's breaking it down for them as they go through each step. So this should help alleviate a little bit of avoiding having to give advice to your employees. So again, step 2 continued. Then you have step 3. It's telling them, this step will decrease tax withholding. It's doing the calculation for them that is listed on the form, refining their holdings. Again, step by step. Step 5, and then we do have the tips in here, so that tax withholding estimator is in here. The link is in here. That tax withholding estimator is available in Spanish as well. Our tax wizard is also available in Spanish. Look at your pay stub. I mean, this seems so, it seems like, you would assume, but there's so many times where I hear our reps telling, the client, like, ask them to look at their pay stub, especially if after they've made a change. Make sure what's being withheld is accurate. So while that may seem silly, so much of the time we are saying that. And then we do have some Q&A in here. What does it mean to be exempt from taxes? So that question that was asked earlier, if you're exempt from withholding, like what do you do? There's no space. It does say here where to do that. It's in the space below step 4C. And when should I review my W-4? It's like I was saying earlier, this just gives a couple different scenarios on when they may want to review or update. And then you have your additional resources. And throughout this guide, I have linked the IRS in different sentences, different scenarios, in case they need to check what the IRS is saying about something. So this is one of those, the IRS W-4 facts. So you'll find that that's linked throughout. So let me go back to the questions here. Where are we on time here? Oh, got a couple more minutes left. So let's try to get to them. 4 years to physically have them on file or electronic copies suffice. The IRS says electronic copies will suffice. Let's see. Is the guide available in Spanish? The guide that I created is not, but I can do like a Google translator and send it to you. I don't know how accurate it will be, but the withholding calculator, the IRS withholding calculator is in Spanish, can be done in Spanish. And if you're a CTR client, the tax wizard guide can be done in Spanish as well.
Kara, we have somebody on staff. If you do the Google Translator, I'll have them confirm it.
Thank you. Where are we at? The form gets difficult for employees who work through the worksheet where the form asks so much detail that you have to dig out your tax return to complete it. Is there an easy way to walk them through this? So with this, again, I know I keep going back to this. Our tax wizard is really great about this. It walks them through this step by step. The withholding calculator is a good tool for that. And it will tell them when you go through the calculator, it tells them, hey, before you start, make sure you have, last year's W-4. Make sure you have this, make sure you have that before you even begin. So as painstakingly as that may be, that really to me is the best thing to encourage them to do. Vince, would you agree with that?
Yeah, yes. The area in which it gets muddy is whenever you are trying to adjust for additional income and trying to refine the withholding that goes beyond step 2. Just putting a
Yeah.
checkbox in step 2C is simple, but then if one wants to refine that, then the calculator does take into consideration the highest job, the second, whether there's one other job or more than one other job. It does become more complex, but the complexity also leads to refinement. So if a person opts not to do that, there is a risk that the withholding is not going to be as good as they might want it to be, but
Right.
it's not mandatory that one go through that step.
Let's see. If you are married and you both mark single withholding, should you also mark the box for other income if both are working?
In that situation, both members of the couple should indicate put a check mark in 2C indicating that there's more than one job, meaning more than one job in the household, not necessarily that I have more than one job, but my spouse has a job, so there are two jobs within the household. So the forms for both members of the household should be checked so that withholding for both individuals is adjusted for purposes of calculating the tax withholding for the year.
Can you expand on the 2,500? What is that dollar amount equivalent to? Reduction in taxable income, reduction of taxes by that amount. This is the most confusing part of the new W-4 for my employees.
The way that works is whatever number you put in there for the 2,000 or the 5,000, whatever that total is, if you take that total and divide that by the number of pays in a year, that is basically the credit for your withholding. So let's say that if I didn't have anything in there, my withholding would be $100. And so I put in there whatever, and I divide by the number of pays, and that comes out to 50. Rather than having $100 withheld every pay, I'm going to have $50 withheld every pay. And so it's simply a way to, it's a flat reduction in the withholding based upon the number that's in that step 3 for dependents.
Do you want to take that next one? We're at 12:02, but we just have a couple more to answer that I think we can get to.
You're referring to the one that says, I believe this was mentioned previously.
Yes.
The purpose of the W-4 is only to calculate withholding. Can an employee complete this any way they choose to calculate their withholding? This will not impact their final return. Example, if an employee is married and both spouses work, are they able to claim single and do not check the 2 job box? They could do that. And it may well serve them, it may serve them well. It's difficult to answer that in advance. So if they're married and they each claim single, it may work out for them. And it really depends upon what their total income is. If their income is above certain levels, let's say that each of them has more than $50,000 worth of income, they might be better served to use the 2C box. And really, sometimes what it comes down to is that the person needs to take a look at what was their final result last year. Do they want to have more withholding, or do they want to have less withholding? And so then that makes them decide what needs to be done. It may just be that if I want more withholding and I want to have an extra $1,000 put away, I divide that by the number of pays in a year. I have 52 pays in a year, so I'm going to have an extra $20 withheld in step 4C. There's no magic answer to any of this, unfortunately. The idea was to allow people to refine, but that assumes that you really want to or are able to put in the effort to go through the steps that are required to refine. There is no magic answer to many of these questions.
Yeah. And then I'm not sure what this is referring to. Do you? Well, why don't they take local county taxes out?
I don't, the county taxes, of course, are not subject to the W-4 form. So I'm not sure what the
That's why
intent there.
I'm a little confused on that one, Debbie. If you can just clarify, we'd be happy to answer. Does the total in the dependent box have to be in increments of 2,000 or 500? Can the employee choose a different amount?
You can choose a different amount. It's not, there's nothing that's going to say tilt if you put in $1,542. The number you put in there is the number you put in there. And as I said before, whatever that total is, when you divide that by the number of pays in a year, that's the credit that the person is going to get for their withholding on each and every pay throughout the year. It does not have to be an even 2,000 or 500.
Not sure if Debbie is still on here. If you are, Debbie, we can reach out to you and follow up to see what you meant about the local county. And that goes for everyone. You know, if you have a question that you didn't get to ask today, feel free to reach out. We'd be happy to help. So we are at 12:06. So thank you guys so much. I know this stuff was so enthralling, and I'm sure you're just so pumped up about it. So thank you for getting on. And Vince, thank you so much for all your expertise in helping answer questions. And we will get these resources out to you later today. Thank you all so much. Have a good rest of your day.